We see a lot of questions regarding installment sales of the property, so I'm just gonna give you a brief example what happens when a seller finances property. And only main home and the personal property do qualify for this type of a transaction. And so basically it's fairly simple. You just determine the gain to begin with, and you extract the interest that you report on your regular Schedule B, and then on the buyer side, the same interest gets reported on the Schedule A, which is a tax-deductible interest. Then we have to determine the return of purchase price and the gain on the transaction. So we're going to use these numbers for the entire example. So sale price of $200,000, purchase price of $90,000, and a gain of $110,000. First, what we have to determine is gross profit percentage. We take the gross profit of $110,000, then divided by the contract price of $200,000, and that's how we come up with the gross profit percentage. This is going to be fairly important, and you will see why. What becomes income to the seller in the first year is the total payments received during the first year. In the example, I'm giving you that the financing takes place on $194,000 with the 5% interest over a 20-year term. So the payment would be about $1,280. If I multiply it by 12, that becomes the total payments received during the year of $15,360. So we have to subtract interest out of it, which was $9,564. And what's left, we have to multiply by the gross profit percent. In this example, it's $3,187. If we were to report the entire transaction in 1 year, the entire gain of $110,000 would be taxable. So there is a lot of benefits to the seller to do financing, self-financing or seller financing, or installment sales. As you can see, if the seller was to be in the 25% bracket, he would pay $27,500 in taxes. And by doing this transaction, he pays only $796. Not only the seller gets the benefits, the buyer does get the benefits too, because the seller doesn't check his credit, nor does he charge for private mortgage insurance. So it's a lot of benefits. It's something to consider in the future. And you can see more information in IRS Publication 537 if it's something that you have done in the past or thinking of doing in the future.